If you want to live the rest of your life as poor, it is fine. But if you do not, you are bored living paycheck after paycheck and have literally no money left at the end of the month, you are in the right video. Let's get started with the best way to earn passive income today with peer-to-peer lending. What is peer-to-peer lending? Peer-to-peer lending brings crowdsourcing to unsecured loans between individual lenders and borrowers. Peer-to-peer company websites greatly reduce the transaction costs of getting a loan, allowing borrowers to enjoy lower interest rates. Lenders can diversify their own risks and achieve higher interest rates than currently available on CDs or money markets. On the surface it sounds good. But before you leap into peer-to-peer lending, you need to be aware of issues with the companies, their marketing strategies, and the lender's poorly understood risks. How everything started. Let's go back to 1997 in United Kingdom. There were two friends, let's name them Jack and Phil. Jack went to the bank and got his loan. He started his own business, paid the whole loan back and became a successful businessman. On the other hand, Phil was not that lucky. He also went to the bank and he left empty-handed. He could not fulfill the bank requirements and his loan was never approved. Then he turned to his old friend asking for financial help. Jack had all the good intention of lending the amount his friend wanted, but at that time lending was illegal by the law. Only banks had the authority to do so. Jack was so frustrated, because he could not help his friend, but he didn't give up. He applied to the authority over and over again. Luckily some years later and some tons of paperwork he had to collect and sign, he finally had the permission to lend to his friend the money he wanted legally. Of course that was the time many companies rushed in to take advantage of this change of law, taking part in the lending procession, overcoming banks, giving loans to people who were not capable of, with the terms they wanted and interest even double than normal. Of course their plan worked, and they began to profit like they have never imagined. So that's how everything started. For half of a decade those companies were flourishing so much that they even were self-pronounced themselves as banks until 2004, when government, after the pressure of the original banks, who saw their profits go down like crazy, decided to make a new law, taxing heavily those companies, forcing them to give up and let the banks steal our money, as they always do. On the contrary, and after several hours of meetings, those companies decided to relocate their focus, and become the so well-known today originators. What does that mean? They seal the deal with borrowers, but they don't lend their money, so they do not get taxed. They find other people willing to lend to their customers with an agreed interest. Let's make an example so it becomes easier to understand. Frank from Poland wants €10,000 loan. He applies to the originator and his loan is approved with 13% interest. Originator provides the loan offer to the platform, and finally platform advertises the loan to the potential lenders, so originator holds the 3%. Platform normally fees his customers with 1 to 3% of the credits. Lenders gain a 10% without any effort and the borrower eventually got the loan he couldn't otherwise. A very fair deal for everyone. Now, in February 2005, Zopa was founded, the first peer-to-peer lending company in the United Kingdom. Some months later Funding Circle was launched, and became the first significant peer-to-business lender, offering small businesses loans from investors via the platform. Funding Circle has originated over £6.3 billion in loans. Nowadays peer-to-peer lending platforms have spread all over the world. But in Europe, where is our concern, almost every single one is located in Estonia, due to their limited laws about online platforms. Best platforms at the moment. Number 1. Mintos. Voted 3 years in a row as best peer-to-peer platform in Europe. Number 2. Bondora. Was considered the best in Europe, until Mintos overwhelmed their throne. Number 3. Groupier. Really strong platform providing high interests and diversification. Number 4. Swapper. The most promising platform, doing huge steps every day, becoming better and better. And for number 5. Investio. A stable platform without any complaints from its clients, providing normal interests. We will discuss on each of those platforms separately. Advantages, disadvantages and risks. Peer-to-peer lending provides some significant advantages. Higher returns to the investors. Peer-to-peer lending generally provides higher returns to the investors relative to other types of investments advantage, such as stocks or index funds. More accessible source of funding. For some borrowers, peer-to-peer lending is a more accessible source of funding than conventional loans from the financial institutions. This may be caused by the low credit rating of the borrower, or a typical purpose of the loan. Lower fees. Peer-to-peer loans usually come with higher interest rates, because of the greater competition between lenders and lower origination fees. Automated investment, which is highly recommended. No effort needed. Just spend a couple of hours fixing your portfolio, and make clear what your goals are. From then on you won't be needed ever again, unless you change your mind about an option, or want to invest manually on something. Nevertheless, peer-to-peer lending comes with a few disadvantages. Credit risk. Peer-to-peer loans are exposed to high credit risks. Many borrowers who apply for peer-to-peer loans possess low credit ratings that do not allow them obtaining a conventional loan from a bank. Therefore, a lender should be aware of the default probability of his or her counterparty. No insurance. Government protection. The government does not provide insurance or any form of protection to the lenders in case of the borrower's default. Thus, on both cases most loans now come with buyback insurance, so lenders do not lose their money. Originators give a 60 days grace period to borrowers to make the payment. If they don't, originator will pay the whole investment back to lenders, and some also pay the interest agreed. Originator closure. There is a rare possibility, but I still have to mention it. If the originator goes down, platform is obliged to pay their customers the amount of money originator owes to lenders. Platform closure. Now let's discuss about when devil comes on earth. There is a -% possibility the platform to close. Then your investment is gone in most cases. But many platforms even insure your money, even in that cases up to €60,000. Conclusion. My personal opinion is that peer-to-peer lending has to be considered a very good investment. Especially for beginners. Is the best because you have to have zero knowledge about market, but it is still an investment and no saving account. So bear in mind you never invest money you can't afford to lose. Thanks for your watching my peer-to-peer review. Subscribe for the future videos to come. And always remember, imagine if you succeed.